Good day, ladies and gentlemen. A warm welcome to our MCLU webinar for March 2023, where we cover all the legislation and compliance updates during the month of February this year. My name is Lettie Janse van Vuuren, and I will be your facilitator for the next 2 hours. Let's quickly start off by just going through all the logistics slides. This is me. All right. You'll see I joined SA Accounting Academy in November 2017. This is what I do for a living. This is where my passion lies. I do the training. I do the webinar hosting. I do a lot of research as well. I also do the daily posts, the daily alerts that get posted on LinkedIn every day. In addition to that, I do a lot of technical summary videos that you can now access as well, and then ad hoc webinars. So this is what I do. And then I've got a couple of clients that always come to me for advice, where I do technical advice, file reviews, those kind of things. All right. But this is me. So let's move on ahead. Just about SAAA, remember that our CPD policy is compliant with the IFAC's IES 7, which means that the training that you receive today is recognized for CPD hours. Right. Remember, as a subscriber to CPD, you will gain access to various rewards. Click on My Rewards, go to Find Out More. Then when you see the reward partner, simply go and click on the reward partner, and you'll then see what the benefits are. The rewards include discounts, reduced premiums, and don't we all just love free stuff? So that's all there. There are 2 pages here, or 2 slides that I've got for you, where you can just basically have a look at the logos, or the logos of the reward partners. So this is what it is. There's the second page. And if there are more, you can just find them on the website. In terms of our webinar housekeeping, today we have 58 source documents. These are being uploaded to your SAAA profile, right? It should be on towards the end of the webinar. Normally a good idea if we have any gremlins or technical glitches or whatnot later this afternoon or the next day even, but it will definitely be uploaded to your profile. The presentation is already available under your shared files in the webinar chat pod on the right-hand side of your screen. So if you have not yet downloaded it while you were in the waiting room, you are able to download it now. Then all of these can be accessed from your SAAA profile, or whichever profile you go to, and you then go on the links and resources, and under there you'll find the webinar recording. Under the recordings tab and under the files tab, you'll find the source documents as well as the presentation. Let's just quickly go and have a look at the 58 documents that I've got for you today. You'll see the way that the documents are sorted. They are alphabetical, and I do try to always put whoever issued the document in front, right, as a prefix. So you'll see all the CIPC stuff together, all the Department of Labour stuff together, all the FSCA, IRBA, AISBA, SAICA, and SARS. Right. A lot of documents, a lot of ground for us to cover today. Apology for that. Right. See, I even have our own glitches. If we don't have them, I make them. Right. So under our claiming for CPD hours, remember you can get your CPD hours for today. There will also be the self-assessment questions, 10 of them that you can do to qualify, or you have to do the assessment questions basically before you can get your CPD hours. But by doing the self-assessment questions, you then qualify for an additional 1 bonus hour of CPD. To do this, you go once again to your links and resources, and then there's a CPD tab, and then there's a Claim My CPD option. Once you've then claimed your CPD, you are then able to view and download your certificate. Asking questions, because we have the luxury of this being a pre-recorded webinar, I will be live online. Not live, I'll be silent in the wings. So when you have questions, please post them on the right-hand side in your chat pod, right? But make sure that you include a topic. Sometimes the questions come in so fast and furiously that I don't remember which topic it relates to. And by the time I go back to go and check if there are questions that I missed, and it's a question like, why is this relevant? Or I don't like this. I don't know what you're talking about. So please make sure that you include the topic that your question relates to, so that I can easily identify it. All right. Feel free to ask your questions during the webinar. If we don't get to them, we do have a formal Q&A at the end. And at that stage, I will then go and address the questions that we did not get a chance to answer online. but I will try and post the answer immediately after the question so that you can see where the question relates to. Okay. If we do have a lot and I don't get to all the questions today during the Q&A, we will then have a Q&A summary that will be uploaded to your profile as well as soon as all the answers have been documented. That's just our regular disclaimer. My quotes for this month, because we all, I think, are feeling the financial belt tightening. I felt this is quite a nice one for the budget. Tax going into the budget, big funnel going into all these little pipes. And look what's left for the people, one tiny little bucket. All right. But in terms of our financial crisis that we are in, we realize that it's been really bad for everybody in South Africa. Everybody's battling. I don't think there's anybody except like the super rich that really aren't having issues at this stage. But it says here, almost every problem people face in their careers and other aspects of their lives, such as failed diets, marriages, and financial problems, are all the result of not taking enough action. That's what Grant Cardone said. And I tend to agree with him, because if you just sit back, we tend to become a nation that just complains all the time. You can't just complain. If you don't take action, you won't get a different result. So if you find yourself in a spot that you don't like, do something. All right. And then Nathan, he's one of the monks, he said, hope is important because it can make the present moment less difficult to bear. If we believe that tomorrow will be better, we can bear a hardship today. Very good advice, because I believe that hope is one of the few things that keep us going. All right. Together with faith and love, but hope being the center of it all. Right, so that's my little philosophical 2 cents for this time of year. What's on the agenda for today? As you can see, we've got our normal topics. From now on, like Karen said last month, we will have the sustainability updates as a regular feature. And under the tax update side, I will always try and give you an estimate of how many minutes we will more or less be spending on it. And as you can see, we've got 15 items this month. So there's a lot. I mean, there's been it was due to the budget speech in Feb. So we've got a lot of changes during Feb. And this I do for the tax practitioners among you, so that you can know more or less how many hours of this or how many minutes of the 2 hours will be verifiable and are relating to the tax update. It's just a guesstimate at this stage. So please go through. If you find yourself going to actual documents to go and do more self-study, obviously that's going to be non-verifiable, but it will be additional hours that you can put in. All right. So you'll see we've got a good spread from the accounting update, auditing, employment law. We've got nice 4 items. Regulator news also important, 18 items. And then just 1 item I found as a really newsy topic. Let's get straight into our accounting update for this month. In the IFRS monthly news summary, which is available to you as a source document, you'll see at the bottom of every topic or every item, I have put there refer to source documents, and then you can go and find it in the source document. But there really is only 1 item of interest. All the rest is like the committee updates, which you're more than welcome to go and read through. You've got them, and they also contain the links in there. So let me just take you there. If I take you to the IFRS news summary, once it loads, so there we go. You'll see all of these. It's a PDF document, so you will be able to go through. If you want to go to the IASB updates and podcast, all right, from the February meeting, you can go and click on the link and you can go and have a look at that. All right. The podcast is also available, which makes it quite nice because you can just sit back and relax and listen. You don't have to worry too much about reading. All right. So there's only one important aspect there, and it deals with the disclosure standards, the effective date. And I've put that in the sustainability section. But tentatively now they've set the effective date for IFRS S1 and IFRS S2 to start on the 1st of January 2024. It might still change, but this is a tentative decision. And I think they just want to make sure that everybody gets in on the bandwagon and starts preparing if they need to. Our second item is relating to the JSE. Right, this was issued by the FSCA. they issued the new rules or amendments to 3 sets of rules. All of these amendments relate to disciplinary matters and penalties, and it all comes into effect or came into effect on the 10th of January this year. The relevant amendments to the 3 rules, there's the one amendments to the interest rate and the currency derivatives rules, amendments to the equities rules, and then the derivative rules on its own. All right, I also gave you the consolidated gazetted notice there, so you'll see there are 4 source documents that you can go and refer to. Our public sector update, they've released the ASB, the Accounting Standards Board, have released the latest frequently asked questions on GRAP or FAQs, GRAP being generally recognized accounting practice, and remember that GRAP only applies to material items. So the questions here only focus on what the issues that are considered material. Okay, and it's of interest to public entities, constitutional institutions, municipalities, municipal entities, parliament, provincial legislatures, trading entities, and public further education and training colleges. Right. So you can have a look. Those are all called entities in this document. So they released this document way back when in 2011, and it's now been updated. They've updated Section 2 for the new framework that is available, and then they've also updated the references to the related fact sheets and renumbered a couple of questions. Right. And then those are the ones that's been updated. Then the FAQs itself was amended to include things like measurement periods, an example on housing projects, guidance on restricted cash and cash equivalents. So it's quite nice there, and I've given you enough detail so that you can go and have a look. Right. The next one is also for the public sector, and this is the update to the specimen financials that the departments use. It's for the 2022-2023 financial year that's been published now, and there is the link to it. Okay, it's not an Excel document or anything. You can go here and you'll find it on the website. Then the nice one that I found, this was issued 2 years ago, a year and a half ago. In November 2021, SAICA issued this as an exposure draft, and they wanted comments on it, and they now have finally finalized it. So this is the final template for illustrative financial statements on a body corporate. It's a full set of financial statements. It's based on IFRS for SMEs, as well as the Sectional Title Schemes Management Act, okay, the STSMA requirements. Just so that you know, the CSOs also form part of the original task force, so this has also been approved by them. But if you go and have a look at what this document looks like, you'll see there is the body corporate template. 28 pages, right. So you'll see very, very nice. And it looks familiar, all of it. Okay. Very nice template, this. So you're more than welcome to use this. This is the first version. And you'll see they say it's published December 2022. They only uploaded it to their website now. So at least we've got it. Great stuff. Okay. Right, so that's it for our accounting update for this month. Moving straight into our auditing and assurance update. In terms of the standards, IRBA have adopted the IAASB's 2021 handbook. Right, so the 2021 handbook was given to you when I last saw you, or when you last heard me, for the MCLU in January. All 3 of these volumes were included, and this is all about IRBA now adopting and issuing and prescribing these publications in South Africa to all auditors. So Volume 1, Volume 2, and Volume 3. Okay, so it's just to let you know that all of those standards are in there. And it also, as luck would have it, remember when they issued this in 2022, there were a couple of standards that were not effective yet. Like, for instance, the QM standards, the quality management standards, ISQM1, ISQM2, ISA 220, that was not yet applicable, not yet effective. So that's also already been included in here. So the standards that are only coming into effect now or have come into effect already have also been included in here. So this is really the latest set. Okay. ISBA have issued requirements, or they've clarified this with a document with a final revisions where they strengthen and clarify independence requirements for group audits. So all that this is to address holistically the independence considerations in the audit of group financial statements. So when we're talking about group financial statements, you've got to deal with independence. There are other implications. There are also things like the definition of engagement team. We've dealt with this in previous updates that I've done with you, but this is now the final revisions to that. As luck would have it here, the final pronouncement effective for audits of financial statements and group financial statements for periods beginning on or after 15 December 2023. So our first December year-end will be Feb 2024, and thus, Feb 2025, December 2024. But earlier adoption is always allowed. All right. So we have dealt with this before. The entire source document is available to you. And remember that whenever you consider anything, you always have to go and consider the code of conduct. So even if you've got nothing else in terms of the Companies Act or something like that that affects us, remember that you have to worry about the code of conduct always and document your compliance and consideration of that. Then AISBA have once again, they have issued proposed revisions to the code addressing tax planning and related services. They really are looking at the functions that professional accountants out there are providing. So this is going to strengthen the ethical expectations for PAIBs, which is professional accountants in business, and PAPs, professional accountants in public practice, when they perform tax planning activities for employing organizations or they provide tax services to their clients. All right. So all of this, it responds to the public interest concerns about tax avoidance and the role that is played by professional tax advisors. Because remember, as auditors, we are the custodians of public integrity, and we need to make sure that we protect the profession. So there we go. It's what it entails. You can go and have a look on that. There's nothing really major on that, but it does look at the additional threats, even though, look, in South Africa, we've got the Companies Act that might prohibit some services, Section 90, subsection 2, if you are the auditor, and it's a statutory audit, you might have issues providing related services. But in terms of tax planning, really, you can do it. Even if the Companies Act does not prohibit you from doing it, thou shalt consider the code of conduct. And this is what comes very strongly. It's always come through strongly in South Africa, and they are now doing this internationally as well. Right. The comments are due there by the 18th of May, and you've got the source documents at your disposal. Then the IAASB have issued another frequently asked document that is now available. It's called the New Technology Focused FAQ. So all that this does is it helps looking at the concepts of what you should consider as an exception and what the concept of performance materiality is, how it affects performance materiality when you perform audit procedures using ATTs. ATTs as in automated tools and techniques. So it's definitely not only unique to ATTs, but the questions have definitely become more prevalent the more we use these techniques, because we are now able to analyze large sets of information, large volumes of data. All right. By, for instance, taking their documents and going through, even if you export it into Excel. Some auditors are actually going into the systems that are live. They've got access to that. So yeah, very important there. Very nice little FAQ document. So if you are privy or you are using ATTs, please have a look at this document. Right. The company secretarial update for this month looks at the first one. The first notice was on the submission of financial statements by co-ops. As from the 1st of Feb, which was my birthday, the category C co-ops with a turnover of more than 25 million, they now have got to file their audited financial statements using XBRL, no longer via email. Okay? This is required in the new Co-ops Act that's been amended, and they now have to use the XBRL function. All right. They did say that further communication will be provided regarding annual returns and advice on how to file the annual returns of the co-ops. There is a step-by-step guide on the filing of the of these documents that will be made available to assist with the process. Okay, so that is coming. As soon as that's out, we will let you know. There's also a list of recommended software service providers that can help you to convert your files into XBRL format so that you can then upload that as the audited financial statements. Right, but that is definitely effective already as from the 1st of Feb. All of these are the source documents are there for you. All right. Then regarding XBRL in terms of IFRS compliant financials. When I first read this, I read depreciation of 2016 and 2019. I thought, what? And I thought, Lettie, go back and read deprecation. Okay. Now, you guys might not realize this because my English is fairly good, but with a surname like Janse van Vuuren, not only did I marry an Afrikaans guy, I am very Afrikaans. So I had to go and look up what deprecation means. And it's basically when it's been scrapped. Okay, it's been done away with. So on the 1st of July this year, with the XBRL from the 1st of July, CIPC basically said that they've got to submit financials. It's never been a requirement to submit IFRS and IFRS for SMEs compliant financials. Now from the 1st of July, they are reminding us that Section 29 of the Companies Act says, when companies provide financial statements to any person for any reason, those financials must satisfy the financial reporting standards, so whichever ones are prescribed. So what does it mean? It means that the existing taxonomy entry points will be scrapped on the 1st of July, and it means that in essence, the financial statements that must be submitted have to be IFRS or IFRS for SMEs compliant. If you are still having to submit all the outstanding financials for the previous 2 years, right, for 2019 or 2020 and 2021, those entry points can still be used, so you don't have to do that, but you definitely have to do it from the 1st of July now on, right, because they can still use the old ones because the financial year in question would still require the disclosures that were applicable during those years, right. Just so that you know, companies that use GRAP as their financial reporting framework, they don't have to be worried about this at all. All right. Then the last one, general beneficial ownership notice. We know all about this. Karen spoke to you at length about this last month, and I'm sure pretty much most of you attended that free session that SAAA had this month as well, this week, but that's this last week. Looking at accountants having now to become accountable institutions. But this was all around the financial task force and their report that they issued and the mutual evaluation reports of South Africa and our grey listing and everything. So this is as a result of the General Laws Amendment Act, okay? Because what has CIPC said in a nutshell? They've now said to everybody they are going to be amending their regulations to address beneficial ownership requirements to meet FATF requirements. So they have been in communication with FATF because CIPC is a controlling or a supervisory body in terms of FIC. So CIPC was required to have a law. There must be a law that requires CIPC to collect this beneficial ownership of legal persons within their register. So that's why the General Laws Amendment Act then started. And the General Laws Amendment Act then amends the Companies Act. And the Companies Act gives CIPC the mandate to collect all of this information. So all that they're saying basically is that the Commission will be implementing the collection of beneficial ownership as soon as the regulations on this are promulgated. So we're waiting for the Companies Act regulations there. And I think that the effective date, if I'm not mistaken, might be the 1st of April. No April Fool's joke. I think it's the 1st of April this year. There are a lot of sections that do become effective on the 1st of April. So what basically is going to happen is the Commission is going to implement this. CIPC will implement this. And they don't know how yet. You can't do this yet. Okay? So you can't do it yet. They will give us more information as soon as the process of the regulations goes through, so that the Companies Act then amends this and it's passed. So we wait with bated breath, and you can't do this yet. So just so that in case you try to upload anything to the CIPC website. Our sustainability update, like I said, was relating to the ISSB standards. The ISSB, the International Sustainability Standards Board, they have tentatively decided, remember, IFRS S1 and IFRS S2 on the disclosure. These are the disclosure requirements for sustainability. It's tentatively going to be effective from the 1st of January 2024. Okay, and there is a source document on that. In terms of our employment law update, there is the document that's been republished, Managing SARS-CoV Exposure in the Workplace. Now, this code of practice has been issued 3 times, and yes, the code is in force. It is applicable to everybody, to all employers, all right? When you have less than 10 employees, there's one certain section that is applicable to you, and you still have to comply with certain issues in there, all right? But the Code of Practice has been published 3 times. The Feb 22 version was set aside after NEASA, the NEASA, the National Employment Association of South Africa, they basically had challenges. They challenged it, and it was then set aside. And then the June version was published, right? And in the June version, they did not mention the biological agents regulations, the hazardous biological agents regulations. So all that's happened now in this document is they have basically just inserted that, right? If I take you to the source document there quickly. Where is it now? There we go. This is the one by the Department of Labour. That's the gazetted notice. And if you go to your definitions, you'll see there they talk about the regulations for hazardous biological agents, right? There we go, 2022. That's what they call the HBA regulations. So it's been inserted. That's the reference that they did. Okay, but that was that. So just this is still applicable to us. And if I can just quickly show you, I know I did a webinar on this long ago. I think it might be time for another one. We all think that COVID is past and everything, but it has not. We still need to manage it. It still is a reality today. So if you go ahead and look at this, there's the small businesses section. That's where you have 10 employees or less. Right. So you're more than welcome to have a look at that. Right. Then we've got the National Minimum Wage Act that increased with effect from the 1st of March 2023. As we know, the minimum wages in some other sectors have also increased. It's increased from 23 Rand 19 per hour. It's increased to 25 Rand 42. It's an increase of about 9.6%. And then the national minimum wage for the expanded public works program workers is 13 Rand 97 per hour. And the national learnership allowances is according to the NQF levels. There is a Schedule 2 as well in the source document that gives you the definitions of allowance, learners, and all sorts of things. Right. So there you are more than welcome to go and have a look at the source document. In terms of the Basic Conditions of Employment Act, the determination has been gazetted where the earnings threshold has increased. All right. The earnings threshold is now increased to 241,110.59 per year. So if you earn above this, if you earn more than the 241,110.59 per year, you are then excluded from certain sections of the Basic Conditions of Employment Act. This is essentially the level where employment law or labour law, specifically the Basic Conditions of Employment Act, the BCEA, sees you as being at management level. Now, whether you have people below you or whether you just manage yourself, it's linked into your earnings. So if you earn more than this, you are regarded as a manager. So if you didn't know that, congratulations. Don't go and ask for an increase, but it's just that you, in the eyes of the law, you are seen as being at management level, which means that you are exempt from things like ordinary hours of work, which means you don't just work your 9 to 5 and then you're like the government institutions that at 3:30 they sort of drop their pens and run, you know, or switch off their laptops or their machines and just run. So it's not like that. You can't be a clock watcher. Overtime also not really entitled to overtime unless it is specifically stated in your letter of employment. You're averaging your hours of work, meal intervals, your daily rest periods, things like you have to work, if you work for 5 hours, then you've got to take an hour break work for pays on Sundays, night work and public holidays. That's all. If you would not ordinarily work, public holidays and Saturday or Sundays would be seen as double time, normally paid as double time. But if you earn above this, you are exempt from that. So it depends really on what your employment contract says in this regard. But so this is literally what the law would look at when this ever lands up in court. Then I found a very interesting article. The article was by Cliff Decker Hofmeyer, CDH, regarding the disaster management regulations. Now, Karen spoke to you about this last month, the regulations that were issued. But this looks at what is the potential impact of this on the workplace. We all know that the national state of disaster was declared, and now this, further to the declaration, now the regulations were issued. And these regulations basically are there to, what they say, minimize the impact of load shedding. And I know we've been in like phase 1 and phase 2, stage 1 and stage 2 again for the last bit, but we haven't been without load shedding, I think, since the year started. So that it's a good sign that we are getting less and less load shedding, or the stages are not going. We're not on stage 5 or 6 or 7 anymore. We load shed for 4 hours at a time. But this is specifically why they declared the national state of disaster. They want to now minimize the impact. Specifically, we are talking about life-saving and specified essential infrastructure, things like health infrastructure, water, rail and ports, food production, critical electronic communications, as well as broadcasting infrastructure. Right, the food production specifically, with the cold chain being broken. The doctor, one of my friends is a doctor, and I had my son at the doctor last week, and she said to me she's never had so many cases of stomach flus and gastros as in the last couple of months. And she says it's constant and it's getting worse. And it's because everybody goes out to buy food, and you don't ensure that where you are purchasing from, that their cold chain has not been interrupted. Because remember, if you leave your food in the fridge without the fridge running, something's going to happen at some point in time. It's going to go off, on and off, on and off, on and off. If you keep your fridge closed, you might be able to save it for a bit longer. All right. I always laugh and I say my next door neighbor actually phoned me when we had those 5-7 days without power in our area. She actually phoned me and she said to me, Lettie, you won't believe it, but the chicken in my fridge is green. And I was like, oh, that is just so sad. Right. But the regulations also allow the relevant cabinet ministers to issue directions that can expedite this. So anything that will mitigate this bad effect or this negative impact on our consistent electricity supply. So the regulations then say that they can issue these directions. And the question is whether the forthcoming directions can potentially then prescribe processes that impact on the workplace. Things like restricting retrenchment, because people are being retrenched. Regulating time off and remuneration for employees during periods of load shedding, because it affects a business's operations. Some firms or some businesses are saying, when we load shed, you don't get paid for those periods. So you can either take it as time off, but you literally can't work. So, yeah, that's adjusted. And you can just see that that's going to open up a can of worms at the CCMA, right? So it might make provision for industrial action even, all right? So looking at it in a nutshell, I gave you here the highlights of the disaster regulations. So they really are looking at the ones that I've already spoken about: hospitals, harbours, railways, water treatment plants, and then also critical electronic communications and broadcasting infrastructure, right? So where feasible, also food production and storage facilities, that's with immediate effect. So that was on the 9th of Feb already. And they can then use emergency procurement procedures to add new energy sources and perform maintenance work on existing electricity infrastructure. Now, whenever I see this, I think to myself, okay, so we're giving them carte blanche to do whatever. The regulations allow the departments to implement emergency procedures and to add new energy resources, who are they going to now use? Where is the money going to go? Right? Is it just somebody else that's going to start feeding from this trough? All right. The lovely vision that we have in our heads since the budget speech. Okay. But they did say here accounting officers will have to report on emergency expenditure to both the Auditor General and Parliament, and that's going to be aimed at preventing another looting situation. All right. The regulations also allow Eskom to import electricity from countries, while the wheeling of electricity to allow third-party networks will also be introduced in a bid to increase power generation. So yeah, there will be wheeling of electricity if we're going to look at third-party networks. I don't know what we're going to do in this instance, but let's hope it does get better and a lot better and very soon. All right, everybody in government will be compelled to introduce electricity-saving measures. So they'll install alternative energy sources to make sure that the services that they provide suffer less interruption. I mean, seriously, if you go... the other day, we wanted just to go and renew our car licenses. And you get there and the post office is closed. They closed because they've got load shedding. So they just pack up and go for 2 hours or whatever. They put out, due to load shedding, closed. Come back at 10 o'clock. And you're like, okay, 10 o'clock, I've got to be somewhere else. But yeah, so much for me trying to do whatever I can in my periods where I'm trying to manage to do it in load shedding. So the excuse is just not on. All right. And apart from the fact that the private companies out there are losing money, I've seen a lot of Pick and Pay clothing stores, and I've heard that a lot of the Pick and Pay clothing stores are closed during load shedding, but yet the Pick and Pay, the supermarket is open. And I'm sure that the Pick and Pay clothing also loses a lot of money there. So yeah, begs to differ. All right, but this is only for the essential services now. So if you are in an area where these are situated, it might be that you are also not affected that much within the block. I don't know if they can switch on the specific entities or if it's going to be the blocks that they allow to not to load shed. We'll have to wait and see how this is run in the future. I know when they had COVID, my brother stays close to a lab that was testing for COVID, so they obviously needed electricity all the time because there was just so much to test, and they also had to keep the samples cold and whatnot and blah blah blah. They never had load shedding, and I was always like, just stop rubbing it in. But yeah, so that's what this is all about. So just think about the effect on the employment in the workplace, right, of the new disaster regulations. Especially when you now go and audit, it might be something that has already affected them, but the new disaster regulations is something that may affect your going concern issues. So as an auditor, you will need to consider that. As a compiler, you will need to consider that. All right. In terms of our other laws and regulations this month, we've got 2 SAICA legal updates. We've got Volume 18, obviously, is for the 2023 year. So we've got Issue 1 and Issue 2 that Karen did with you last month. So this month we're looking at Issue 3, which covers everything up to the 17th of Feb. And then normally they do two weeks later, another one. The next one is up to the 10th of March for Issue 4. So Issue 3 really looks at the Competition Act and then the Disaster Management Act, the fact that they declared a national state of disaster. That's already been done by Karen in the previous MCLU. Those ones I'm not going to go into too much detail. In the actual source document, you'll find a lot more detail in there. All right. In the next one, Issue 4, you'll find the Disaster Management Act, and this is now the regulations. And we've just dealt with that. That's why I say see previous slides under our employment law section, because that's where we deal with the severe electricity supply constraint disaster regulations. Okay. So you can go and have a look at that. The Non-Profit Organisation Act, the regulations there. Karen did with you last month. I'm just reminding you that the comments are due in a week's time or so by the 30th of March, 2023. If you go and have a look at these documents, you'll find SAICA Legal Update Volume 3 and 4. Let me just go and show you. As always, what I like are the notable one-liners, right, which give you the act, then it changes, and then it gives you a one-liner. Right, there's your employer returns and assessments. We will also be looking at that. I've got that in there. Normally, we focus on the ones with the red flags. That's how we get to the big 5 every month. So that's how they get to that. But there you'll see there's lots of jumps in here where you can go to anything. All right, so please make sure that you go and read through those. Those are the one-liners, and then the other issue will have, for instance, if they have any additional ones that they will be discussing. Like, for instance, this one has the notable one-liners, and then it's got the Competition Act, 2 of those, and then the Prevention and Combating of Hate Crimes and Hate Speech Bill. They've got that in there. So there's more than enough sources here for you to go and read up on. Right. In terms of COIDA, which is the Compensation for Occupational Injuries and Diseases Act, also what the old school people refer to as workman's comp. So if you still refer to it as workman's comp, don't feel alone. My dad always spoke about workman's comp, and then when I spoke to him about COIDA, he would go like, what? Yeah, anyway. So this has just been gazetted, the maximum earnings and the minimum assessment. So this is now for the year 1st of March 2022 to the 28th Feb 2023. The maximum earnings on actual earnings is 529,264, and then on the provisional assessment for the 2024 year is 563,520. Currently for this year as well, the minimum assessment for employers is 1443, and the minimum assessment for private domestic employers is 498. And this is something that a lot of people don't really know, that if you employ a domestic person or a domestic worker, you need to be paying workman's compensation to the compensation fund. Right, so you need to be submitting those assessments as well, because they are covered as an employee. Right. Remember when the law changed so that they are now employees, so they are covered when there are certain accidents that they can claim for injury or disability or death. Then the opening of the 2022 return of earnings season. It is going to open from the 1st of April to the 31st of May. And just so that you know, if you do this after the deadline, you can still do your submission of your return. You'll just incur a penalty of 1%. Interest would be charged on the overdue account or payment made after 30 days of the invoice date. And it's the employer's responsibility to then notify the compensation fund if there's any changes in the particulars. Business address, change of business, change of physical address, anything, within 7 days of the change happening. Right. If not, they can slap a penalty on you. Right, ladies and gentlemen, and then very important, I received a notification last week on the ROE online system that is temporarily shut down. The alert was done via Twitter, and this is just to say that the compensation fund has already shut down the ROE online system for certain sections, like for instance the employer registration and the assessment modules, from the 19th of March, midnight, which is Sunday, until midnight on the 31st of March. So they'll be busy preparing. That's why they're doing this shutdown, to do all the preparatory actions, as they say, to get ready for the filing season that will start on the 1st of April. There is a source document on that as well if you want to go through it. Right, our taxation update for this month is quite extensive, so I think what I'm going to do now is I'm going to take a quick 10-minute break with you. I'm sure you've been influxed again with some information overload. So I think let's pause here and let's take a 10-minute break. Right, so grab yourself a comfort break, coffee, tea, no booze. You have to listen to me for the next hour as well. But do a comfort stretch, get the blood circulating. Right, enjoy your break, ladies and gentlemen. Right, ladies and gentlemen, welcome back after the break. Let's move along briskly with our taxation update for this month. There's quite a lot of items, but as you see, every single item in this section is available to you as a source document, bar the ones where I've got the links provided on the items. All right. But so this one, the first guide is the guide for employers in respect of allowances. This is as a result of the changes from the budget speech. That's for the travel, the rate per kilometre and subsistence allowances in respect of the new 2024 year of assessment. It contains examples as well as the source codes for the RP5s that you must use. The guide is 15 pages and really worth its weight in gold. All right. The guide for transfer duty via e-filing, 66 pages long, and it has been updated with a new tax rate. Those are the only two new guides that were updated this month. Nothing else. No interpretation notes issued for a change. Binding general ruling, also only one. I think everybody was so busy preparing for the budget speech and doing everything else around that and all the notices that were issued. They really didn't have any time for binding rulings or interpretation notes. So the only BGR that was issued was the BGR 28. Now, BGR is a binding general ruling and it is effective immediately. And it deals with the VAT Act in terms of electronic services, the specific requirements relating to credit and debit notes, exchange rates, and advertised or quoted prices. So all that's now happened is they've expanded the title, okay, to look at credit and debit notes, exchange rates, and advertised and quoted prices. So it's just the name that's changed, but it is effective immediately. All right. So you can go and have a look at this. Obviously effective until the VAT Act will change to amend this. All right. So the BGR is effective immediately until stated otherwise. Then we get to the notices, and this is the section where I think we've got 11 this month. The new SARS tax-free rate per kilometre, the notices that were issued, and you'll find all of these in your source documents. There's notice 3112, 3113. Those are the two notices that were issued. The first one is the rate per kilometre, and this is also what people call the SARS tax-free rate. So from the 1st of March, it is now R4.64 per kilometre. So in other words, if you pay your employees, they don't get a travel allowance or anything, but they travel for business purposes. If you pay them R4.64 per kilometre, you don't have to worry about any tax. It is completely tax-free. Right, they'll have to submit their travel claim with the kilometres, you'll approve it, and that's what you will then pay for. Right. So it is in terms of section 81B2. So that's the rate per kilometre there. And then the subsistence allowance, the determination of the daily amount in respect of meals and incidental costs. So you've got your overnight allowance and your daily allowance there. If it's for incidental costs only, it's 161 Rand. Meals and incidentals at 522 Rand per day. Now remember, this is for a day or part thereof. So if you are away for one night, an overnight allowance, you will then be able to claim it for 2 days. All right. If your employer pays for all the meals and everything, you can then claim your incidental costs for 2 days. Tax-free. Right. And also, they also give you the in the guide, they give you the RP5 source codes where this must be posted. Then if you do any traveling outside the Republic, the notice that was issued in March 2019 remains effective now, even now. So that the table for the daily travel amount outside the Republic, they'll tell you how many dollars and whatnot it is, and then you'll use the conversion rates. But there is the link to that document if you want. And then I've just said here, refer to the updated guide issued as well. I found an interesting update or a write-up on the SARS website, and I couldn't for the life of me find this anywhere else. I think it's in the What's New section. But there's no article. It's not under the VAT section, nowhere. But SARS, basically, they've been inundated with requests for the Commissioner to exercise the discretion to override the disallowance of input tax when they purchase a car in certain situations. Now, we all know that input tax can be deducted, right, from a car that is not a motor car, so your buckies and your delivery vehicles, those ones you can claim the input tax on. But if it is regarded as a motor car, if it meets the definition of motor car, no input tax can be deducted. Double cabs, no go, right? Even if you've got a canopy on and you transport passengers in it, no go. Specifically transporting passengers, no go, right? Even if you've got a double cab and you use the loading bin at the back for work stuff, you can't, right? Because it's a double cab. So the Commissioner is just stating here very clearly and unemphatically that he doesn't have any discretion to override this prohibition of input tax. So the general principle is a vendor is not entitled to deduct input tax on the acquisition of a motor car, irrespective of the purpose for which the motor car is acquired. To determine whether input tax can be claimed, the vendor must first establish whether the vehicle is a motor car as defined. And then they speak about, obviously, the Act is written in legalese, but there is Interpretation Note 82, and this one is available to you as a source document. And this one sets out the detail on how the test works and how you determine whether or not it is constructed mainly for conveyance of passengers or not. And you've got to look at your ratio of the loading bin to the car and whatnot. So you determine whether the car is intended mainly for the carriage of passengers. So there's an objective test that must be applied as well. And if it's more than 50% for the carriage of passengers, it's regarded as a motor vehicle and no input VAT can be claimed. So if the vehicle concerned qualifies as a motor car, input tax will be denied. Okay. Unless the vendor is a motor car dealer or a car rental enterprise, because that's provided under the exemptions in Section 17(2)(c). Okay. So the vendors shouldn't request a ruling from the Commissioner to use his discretion. He's basically saying with this, listen guys, I'm a little bit gutful now, so stop asking me to override it because I can't. Right. The VAT Act doesn't give any discretion to the Commissioner to do this. Okay, so I thought that's just interesting to brush up on again. The deduction of donations, this is a document that was gazetted as well, and it asks for further information that must be contained in a receipt that's been issued in terms of Section 18A2 of the Act. So this is before a deduction for Section 18A1 will be allowed. And the notice was done. I've given you the notice 3082. It came into effect on the 1st of March this year, and it applies to all receipts issued on or after that date. So now, the further information that they look at, what will that be? The further information is the donor nature of the person, right? The donor identification type and the country of issue. So is it a SA ID or a passport and the country of issue? And that's in the case of a natural person only. Identification or registration number of the donor. They also say here note. They've got a note, a further note, and a final note. I love this. The information listed also includes the income tax reference number of the donor if it's available. And I can see because it's not going to be a mandatory field, they're just going to say, oh, well, we didn't have it. The contact number, email address of the donor, a unique receipt number, trading name of the donor, if it's different from the registered name. Further, the SARS website has clarified that the additional information is in line with the best practice of third-party requirements. That will help SARS to have this process of making deductions available to qualifying donor taxpayers a lot easier, and they will help to prevent Section 18A claims abuse. Because obviously there's been a lot of abuse. People are issuing these donation certificates left, right, and center, and they think it's okay if you donate anything to anybody, you can claim it as a deduction, and it's not the case. Then their final note said, the SARS website noted that there will be a further process that will ultimately prescribe the manner in which this information needs to be submitted. So this will be a separate notice, so you're not going to have to put everything in an envelope and mail it. At the moment, you can email it at this stage, but they are looking at having the functionality so that you can upload this easier. All right. So they are looking at how this will be submitted, and that will be followed in the next couple of months as a separate notice. Then we get to the 2023 budget summary. Now, I know you've probably had your fill of all the summaries that relates to the budget speech, but I have given you here the budget 2023 and the tax rate web pages. There are the web pages there, and I've given you a link to the taxation proposals, and the highlights I'll go through it now. But what I want to refer you to is the 3 documents that were issued by National Treasury. It's the budget highlights, the People's Guide in English. The People's Guide is also available in other languages, and then the budget tax pocket guide, which I found very useful. So let's just go and have a look at it quickly. At the very top there is the highlights, and you'll see the document here. Only 2 documents or 2 pages long, but you'll see they've got all the blah blah blah, the spending programs and the fiscal stuff. The tax proposals is there, all right. The energy impact, the diesel refund levy will be extended. So you can go and have a look at this, because this, obviously the syntaxes has gone up again. No changes in the general fuel levy or the RAF levy, but the diesel refund levy will be extended as well for a period of 2 years until the 31st of March 2025. So there's the consolidated expenditure by function. There's the fiscal framework with the revenue, expenses, and the budget balance, so that we can see what our GDP is. Right. So you can see where the money went: learning and culture, health, social development, community development. Right, that's the allocated ones. Payments for financial assets. Yeah, don't know what that's for, but the revised estimate, quite substantial for this year. Right, and the next couple of years you'll see. You can see where the exceptions were for the 2023 year. That's this one. So they're planning to do a lot less payments for financial assets. You can think to yourself that that's where a lot of money, I think, was misappropriated. I'm speculating. Please don't quote me on that. Okay. Tax revenue, this is where it comes from. Still personal income tax, VAT, corporate income tax, and then all the rest of it. But still, personal income tax, we still contribute the most. So that little picture that I showed you in the beginning where the tax goes into the little funnel, that still is true. All right. Then this is the expenditure on how it looks, the social services, peace and security, where this is all going to. Home affairs, not a lot. Police services, quite a lot. Health, district health services, general hospital, other health, provincial hospital, also quite a lot for a change. But you'll see the learning and culture really only goes to university transfers, SDL institutions, education administration. The majority goes to basic education there. Right. Economic regulation and infrastructure. Yeah, let's hope that includes the sinkholes that we have here on Hendrik Potgieter. We're close to where I stay, because I'm now on the detour route, so it's very, very bad. The trucks that take this road are just causing a lot more damage. Right, so you can go through the rest of it. The People's Guide in English, 4 pages, and you'll see that this is where they explain it quite nicely. Well worth a read, okay? They're moving towards enhanced economic growth. Like I said, do something now, but make sure that you keep your hope alive. Right. And then this you can just go through again. In terms of the grants, you'll see the old age grant, what it was, what it is now. Right. And the children's support grant is now 505. Disability grant 2085. War veterans. You can see all of this. Right. So it's quite nice to see it all in one spot, to see what the grants now are. All right. Not that it's gone up by a lot, but it does make a difference. Okay. 19.6 million people to receive social grants is a lot. Then we've got the tax pocket guide, and this is the one that you can fold up. You'll see if you print it out, you can do it. There's the tax rates, the rebates, okay, trusts, everything, provisional tax, foreign dividends, your deductions, your interest exemptions, what the cost is there, your travel allowance, everything. Meals, incidental costs, your allowances, subsistence, fringe benefits, dividends tax, your other withholding tax, all of it's in here. All right. SARS interest rate, so yeah, And then once again, just a little bit of budget highlight. There's all the transfer duties there, the VAT Act is there. Okay, 15%, nothing changed there. Right, but I wanted to give you those three because I like short little summaries that I can always refer to. So those three summaries, very, very nice. The highlights for this year, they are granting tax relief by adjusting the personal income tax brackets and the rebates. So we know about that. There's an expanded tax incentive for businesses. That's the use of solar energy power or the renewable energy assets. And the expanded tax incentive is at 125% for 2 years from now, the 1st of March. So it is for assets that are brought into use during these 2 periods, not on existing assets. And it's an accelerated or expanded one at 125%. As this is a deduction. All right, that's a deduction. And then for individuals, we've got a tax rebate only on the solar PV panel, the PV panels, that's photovoltaic panels, and that's 25% of the cost for a limited period, subject to certain conditions, capped at 15,000 per individual. Later on, I did give you some detailed slides on that because I found found one document and one very interesting article where I can expand on that for you. Even though it might still change, it's only proposals at this stage, but they have given it so that people can start planning to definitely benefit from this. And we all hope that it is going to change substantially and maybe extended for a period beyond this. Okay. Adjustments to the tax tables for transfer duty, retirement fund lump sum benefits, retirement lump sum withdrawals, all of that. Okay, sin taxes, no, like I said, no changes on the general fuel levy and road accident fund levy, health promotion, and the levy on beverages, the sugar tax, is delayed until the 1st of April 2025. So sugar tax not increased at this stage yet. So if you drink Coke or Fanta grape or cream soda or whatever, congrats, it's not going to go up. Right. So that was in a nutshell. You can go, there's another budget summary I will refer to later as well. The Income Tax Act, the draft rates and monetary amounts and amendment of revenue laws bill. This is basically just confirming the rate adjustments that were referenced in the annual budget. And they also look at the normal tax rebates, the medical scheme fees tax credit, other amounts that will be included in your income, like the motor vehicles, as well as paragraph 9 of the 7th schedule, right, for your office employment or office residential accommodation benefits. Then the Taxation Laws Amendment Act. Remember, this is the one now that is as a result of the budget speech. The budget speech will now become a bill, and then the bill will become an act. This is the act for last year, the one for 2022. And it's a reminder that the definitions here have been further amended as from the 1st of March 2023. The definitions of those in brackets, okay? So just so that you know that the budget speech that we've had now, the bill will be passed, and then the bill will become an act, and the act is probably, that normally goes before Parliament in about October every year, and the President normally assents to it in January when it becomes an act. So we look forward to the same sort of timeline here. Very important this month, SARS have published their new dispute rules. So what are the procedures for you when you lodge an objection and appeal against an assessment? The procedures that you must follow for alternative dispute resolution, your ADR, and the conduct and the hearing of appeals before the tax board or the tax court. It's effective immediately. It was issued on the 10th of March. Those of you that are already following us on LinkedIn, if you follow SA Accounting Academy, you would have already received this as a technical alert on that day when it changes. All right. Then also from a tax perspective now, we are still talking about the trust registration beneficial owners details. Now remember, Karen has spoken to you about this because the set of draft regulations has been made available. And this I took from your slide for last month. And the beneficiaries basically must be listed in a searchable electronic format. So SARS will then be recording all the beneficial owners of newly registered trusts. You can have a look at the trust registration query, that's the online system, And they've also got an updated guide for the online query system. So it is there for newly registered trusts. These systems are in place already to do this. Okay. That's in terms of the Trust Property Control Act, effective already. All right. The next phase of the Traveller Declaration System, they call this extra SARS Traveller Tax. But it's got nothing to do with any additional traveller tax. All it was, and Karen told you this last month, is that it's just basically for people coming into South Africa that they don't do their declarations manually anymore. They're moving electronically. So there's an online traveller declaration that will happen, and it's going to speed up the process through customs, all right, although the clearing process. It's already been successfully implemented last year at King Shaka International Airport. So what they've released this month in Feb is that the next phase is planned at all airports. And they're going to start with Cape Town on the 28th of Feb, or they have already, OR Tambo tomorrow on the 23rd of March, and all the other airports in the second and third quarters of 2023. So that will be done, the land ports like Beitbridge and Skilpatak, that will also be done by the third quarter of 2023. And then Cape Town Seaport will be implementing this in the last quarter. Obviously, that's a big one there. All right. But that's the next phase that will be rolled out. So if you need any more information on this, if you leave or enter South Africa by air, you will then have to complete this online traveller declaration. If you click on the link here, it'll take you to that, and you will then receive electronic confirmation before you travel that it's been submitted. If you are traveling with children or infants, they will also need to complete a declaration on their behalf. Okay. There's a little short declaration system video that you can go and have a look at. Very nice, short and sweet. They explain it very nicely. And then you can also go to the Traveller Declaration webpage. So if you've got friends of yours that are traveling overseas regularly, or yourself or anybody or your clients, it might just be worthwhile to send this to them so that they're aware of it. Okay. And then the estate duty, the SARS estate duty webpage has been updated for information and clarification on whether the executor, I don't feel like feels like an executioner sometimes, whether the whether the executor can be held personally liable for estate duty, and when and how to request the deceased estate's compliance letter, the DEC letter. So this has just been updated, and you can go and have a look at this information. If you deal with estates, it's quite nice to just be up to date on this. Right, then we've got the solar panel tax incentives, just in a little bit more detail for individuals and for companies. And if I can briefly go and show you what the document looks like, the improved revenue collection here has enabled the Minister to provide this tax relief. It's more than 20 billion rand to both individuals and companies, and it's to support this energy crisis that we have and to help with the inflation tax adjustment, okay, to account for that. For individuals, like I said, it is a tax rebate. So individuals, they are able to claim a rebate to the value of 25% of the cost of new and unused photovoltaic panels, PV panels, and that's up to a maximum of 15,000 Rand per individual. It's a rebate, it's not a deduction. I have not yet received clarity on whether or not this 15,000 Rand can lead to a refund, but my gut feel, I haven't found anything to the contrary, that it will not be allowed to create a credit on your account or a refund. So one thing you cannot claim for are diesel generators, inverters, batteries, and installation costs. Even though you can't operate the solar panels without inverters and batteries, the inverters and batteries can operate on their own, but they don't really expand on the alternative source of energy. Okay. They basically just store energy that you get from Eskom anyway. That's what the inverters and the batteries are for. Diesel generators, well, apart from the smoke and stuff that they generate, I've seen people that have replaced their petrol generators now and they hook it up to gas. And I've heard that because people say gas is a lot cheaper than petrol, and I'm thinking, okay, I don't even want to know how you convert that, but I'm sure they've done it. Okay, I don't know if they'll get a compliance certificate for it, but yeah. So anyway, so in a nutshell, that's what you can claim. That's the amount of the rebate, 25% of the cost of new and unused solar PV panels. Okay, maximum of 15,000 per individual, and it's per property. So if you've got 2 houses, you can then claim this twice. All right, they do say that by implication in the FAQ document. Individuals will only be able to claim the rebate if they have what? A valid tax invoice where they indicate the cost of the PV panel separately, along with proof of payment. So you're going to have the VAT invoice, proof of payment, and then a certificate of compliance that shows that the PV panels were brought into use for the first time in the period from the 1st of March 2023 to the 29th of Feb 2024. Right, next year is a leap year, so that's why it's 29. So then if you are a normal pay-as-you-earn taxpayer, you are then able to claim the rebate on assessment for the next year filing season, and provisional taxpayers will be able to claim the rebate against both the provisional and their final tax payments, provisional tax payments. All right. The document that I've given you here that I just want to show you quickly is the 2023 FAQs, and this document looks at some important questions on how you can claim, who can claim, what can be claimed, how to claim, how it affects inverters and batteries and whatnot. So I just want to spend some time there quickly. There we go. There's the document. Okay, nice little. You can see they're busy affixing the PV panels to the roof. This came out very shortly after the budget speech issued by National Treasury, dealing with a budget. Okay, so this is to help you with your immediate decision rather than postponing the solar installation until the legislative process has been finalized. I can't see them changing them this much. I can see them expanding it. And obviously, once people start claiming, they'll see where the loopholes are, and then they'll close those loopholes. So we can look forward to the whole process. But the objective here is so that households invest in clean energy generation capacity, which can supplement your electricity supply. They're not looking at you completely going off the grid. Great if you can, but the incentive is only going to be available for 1 year to encourage the investment as soon as possible. All right. Who can claim the investments? Like I've said, individuals who pay personal income tax. It's not intended for solar installations at business premises. There's a complete separate section on that for businesses. What can be claimed? I've given you the example there. So if you buy 10 solar PV panels at a cost of 4,000 per panel, your total cost is 40,000. 25% of that then is 10,000. And that's up to 15,000. So you can, with a clean heart, go and claim your 10,000, provided that you've got your VAT invoice, your COC, and your proof of payment. Okay. Okay. So it's VAT, POP, COC. Those are the 3 things you need. If you buy 20 panels at 4,000 Rand each, your total cost is 80,000. 25% is 20,000, but you can only claim 15,000. So there's your limit. All right. They've said here new and unused solar panels qualify. They can be installed as part of a new system or as an extension of an existing system. So if you've already got existing PV panels in place, you can just expand on this and then claim that. All right. It says here, only solar PV panels with a minimum capacity of 275 watt per panel. That's the output, will qualify for the rebate. Other components like your batteries, inverters, fittings, diesel generators, installation costs, portable panels also do not qualify. It has to be affixed to the roof. Okay. They must be installed at a residence that is mainly used by an individual for domestic purposes. So they do speak here about, and you can obviously claim your office expenses as well, because if you use your domestic residence for office purposes, you've got home office expenses, you will then have to apportion that as well, but you can claim that. Okay. So it must form part of the system that is connected to the mains distribution of the private residence. Brought into use for the first time during this next financial year, 1 year. The businesses get 2 years on the extended incentive. We only have the 1 year at this stage. Okay, that's how you can claim. I've already spoken about that. Why not diesel generators? Why only solar panels? They're talking about carbon tax playing an important role here. Yeah, I've already spoken to you about that. What about people who rent their homes? If there's no ownership limitation, there is no ownership limitation on the incentive, so you don't have to own it. So installation by landlords would be eligible or by renters. Okay, so only the party that pays for the solar panels can claim the rebate. So as a renter, if you install that, go for it, but you will be able to then claim the rebate, not the landlord. What about sectional titles or bodies corporate? Not body corporate, it's actually bodies corporate. But let's stop the grammar lesson. If occupants are enabled to install their own panels, then it applies as for all other individuals. The body corporate won't be able to claim this because it has to be on a residence. Okay. So it's not clear whether the many body corporates will be purchasing solar installations instead of leasing or other options. They might go that way, but government is still going to consult on this because there's widespread interest by body corporates purchasing and installing solar panels. All right. We've had to rent a massive generator when we were without power for those 7 days. The body corporate actually rented one for us. I think it was a cost of like 30 grand. And we only had it for like 3 days and then the power got sorted. So instead of doing that, we might look at having, especially because we've got so many people now living in complexes. Complex living is the way to go. Community living is the way of the future now. All right. So yeah, we'll have to wait and see what happens with SARS. Will I need to pay SARS back if I sell my home? No, there's absolutely no recoupment on this. You get it now when you enable the expansion of your alternative energy. All right. But there will be a clawback of the rebate if you sell the panels themselves within 1 year if they are after they are first brought into use. Okay. Because that's obviously to look at potential abuse here. People just buying it, claiming the rebate, and then selling it within a year. So there will be a clawback provision there. Okay. When will this become part of tax legislation? Or at this stage, it's in the amendments. So it will be for public comment in the 2023 TLAB, draft TLABs, okay, the draft taxation laws amendment bills. So that's going to be later in October, Parliament, then normally in January, the President assents to the amendments. Right. So this is like the shortest 4 pages of that, but I found this to be a very valuable document, and I think one that you can maybe send to your clients. All right. Let's go and have a look at what businesses can do. Now, for businesses, there is no FAQ document, so I've had to scrounge around finding, and I found a very nice little article on that. And this is what I found. It says here they've got expansion of a renewable energy tax incentive. The tax incentive is already there, okay? We've got the 50, 30, 20. Your section 12B, 12C is already in here. And you've got the 100 at the moment. If your project's below 1 megawatt, you are able to deduct 100% of the cost in the first year. That's as it stands now, all right? Your 50, 30, 20 is for qualifying investments in wind, concentrated solar, hydropower below 30 megawatts, biomass and PV projects above 1 megawatt. So there are very much limits in place here before you can qualify for this renewable energy tax incentive that exists at the moment. All that they've done now with the budget speech is they've expanded this energy tax incentive. And for that, it's now available and it's been expanded to help them or to encourage rapid investment so that we can get more people off the grid and have more available so that there won't be load shedding. So the current tax incentive does allow the cost of the deduction of the costs over a 1 or a 3 year period, like I said. Okay, so there's cash flow benefit in the early years of the project. But now there will be no thresholds on the size of the projects that qualify, and the extended incentive will be available for 2 years so that it stimulates the investment in the short term. And I think if they see that this works, they might even extend this beyond the next 2 years. So, very important here. Under the expanded incentive, the businesses are now able to claim 125% of the deduction in the first year for all renewable energy projects with no threshold on generation capacity. So you don't have to worry about your 30 megawatts for solar power and your PV projects above 1 megawatt. You can just claim 125% deduction in the first year. And it's only going to be available for the assets that you brought into use between the 1st of March 2023 and 28th of Feb 2025. So for 2 years, okay? So the businesses will claim this as a deduction, so it'll be a reduction in their tax liability. So they said here a renewable energy investment of 1 million rand could qualify for a deduction of 1.25 million rand. And under the current corporate tax rate, that could then lead to a reduction in the corporate income tax liability by 337,500, which is nothing to be sniffed at. Okay. So I thought I'd bring this in because I think it's important that we understand how this is going to work. And I don't think it's going to change significantly. All right. They might expand it longer. They might change the 125. They might change or provide some more requirements that must be met first, right, before people can claim it. But I don't see that happening. I think for now they might just leave it, and then as soon as they see people abusing the system, obviously they'll start closing those gaps. All right. So that is it then for the tax update. Let's get to our tax court cases. For our tax court cases this month, we have 2. Both of them are on the Tax Administration Act. The first one deals with a Rule 31 statement, whether or not that can be struck out on the basis that they introduced a new impermissible new ground of assessment into the appeal. The second one on tax administration was a default judgment based on the delivery of the notices found to be fatally defective because they weren't delivered to the chosen address for delivery of the documents. Okay. So the process is by SARS fatally defective because it wasn't delivered properly. Our High Court case for this month, I shouldn't say cases, it's only case, was Lance Dixon Construction. And this was all about, in the tax administration, all about an understatement penalty. And it was all about whether the tax court, having found that SARS had failed to establish the taxpayer's understatement of taxable income that resulted from a failure to take reasonable care completing their return, they were nonetheless entitled to impose a 25% penalty. SARS having failed to plead a case for the imposition of a penalty on any ground other than the one that it failed to prove. So the court was entitled to impose a 25% penalty. Okay. That's in the High Court. And then the Supreme Court of Appeal cases. The first one is Coronation Investment Management, and that deals with the income tax as well as the Tax Administration Act, dealing with revenue, your Section 9D exemptions, whether you've got a CFC, a controlled foreign company, is a foreign business establishment, as it is defined, and also dealing with their understatement penalties. You can go and follow these links. As you can see, every single one of these, I've given you the link to go and download this court, the whole case file completely. Right, the next one is Johnny Winsome LC Maddox NO. So this deals with the exchange control regulations, and it deals with the legal consequences of a forfeiture order that was issued in terms of Regulation 22B after the winding up of a company. Right. They basically said that the liquidation does not nullify a prior blocking order for that company's assets that's issued. The issuance of the blocking order and the forfeiture order doesn't render the Reserve Bank a creditor of the insolvent company. So the forfeiture order was competent. That's what they found here. All right. So, and that is a wrap on the court cases. Then we've got under the SARS update, the last bit of the SARS scams this month. So we've got the office return scam. On each of these, they are available as a source document, examples of what it looks like. There's an SMS that says your taxpayer, your office return is not yet filed, and please click on the link. They said specifically here, please ignore and don't click on any links. You can email phishing@sars.gov.za if you are suspicious at any point in time. Right, I've received in the last month at least 3 of these. In terms of SARS, I got a refund that was due to me, a revenue letter. Got one via, I get lots via email. Congratulations. Somebody overseas has left you 5 million rand. Yeah, right. I'm sorry, it was $5 million. You get happy for like 1 second and you think, I'm not that big a sucker. Tax notification letter also. It says you are eligible to receive a tax refund, but please click on the link to go and verify. And the minute that you click on the link, they've got all your details and they've fished. You have been fished. The revenue letter email says that SARS has issued correspondence that requires your urgent attention. There's always a sense of urgency or a sense of hope. Oh, cool, I've won money. I've got money due to me. I've got money due to me. Who doesn't want extra money? So you click on the link. Think before you click. All right. As well as this one, SARS issued correspondence. Why would they send you an email like this? And you must check the email addresses. It's ARB ones, and it looks like it's at sars.gov.za. When you go and hover over it, you'll see it's some Hotmail or Gmail or some other address that you don't even recognize. Okay. Please, for these, don't go and click on those links. The regulator news section for this month. For URBA, just short and sweet, the firm assurance work declaration and the firm-related information. Remember, the deadline for submission of that is due by the end of the month, 31st of March. So it's just a reminder at this stage to you. All right. There is also the explanatory memorandum is there that details all the instructions. So you would have received this. Okay. The SAICA ones, the first one, very nice. Everyone's talking about this one, the CA declaration on compilation of AFS. So SAICA have basically developed a letter. It's not a technical report. It's where you, as in your capacity as a CA, has compiled the financial statements. And this declaration basically states that a CA has compiled the financial statements, and as a CA, you've had to comply with a SAICA code of conduct, which is aligned with the international ISBA code. So it doesn't replace any ISRS 4410 compilation report, but it's to supplement the financial statements and basically a marketing tool to enhance the confidence in the financials that have been prepared by CAs. I can foresee that other professional bodies will also be having something similar. But this is obviously, because you've got a CA that's prepared or compiled the financials, it obviously lends more credibility and it enhances the confidence in the financials rather than those prepared by the company itself or other accounting practitioners. We know that the CAs, we're a snobbish bunch, okay? We know that. And this just proves that. But the letters are available to you. I've given you the one in Afrikaans, but I've also given you the 2 documents here. You'll see there's your declaration, the one, and there's the Afrikaans one as well. All right, these are Word documents, and you'll see their benefits, the use, whatever, blah, blah, blah. There's the declaration, and it says the following AFS has presented on what has been compiled, referred to compilation report. Then they talk about the designation of the CASA brand, SAICA as the premier accountancy body, blah, 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 will be so fabulous. The fundamental principles that have been embodied. I think it brings the message across very clearly. And if this is what will enhance the credibility and the confidence in financials, then I think it's a good thing. Right. So it confirms that the financial statements have been prepared by a CA who has observed and complied with the SAICA code. Obviously, now, once you've done this, SAICA will want to come and see, and they will, if there are mistakes and stuff found, people can still report the CAs to SAICA, and SAICA will then go through the disciplinary process. Okay. So that is just a short and sweet there. But nice to see that it's also available in Afrikaans. SAICA have also now released their Code of Conduct, the 2022 edition. So they have now waited. They always wait for ISBA to finish theirs. ISBA's was done in 2018. So, and URBA's was done last year, and they finally accepted it in Jan or December last year. So SAICA basically waits until both AISBA, who is one of the standards boards of IFAC, if they've adopted it, and URBA has adopted it, then SAICA goes through it. And they also then have included the South African requirements that are applicable to all SAICA members and associates. Right. So it's basically the same as it is in the URBA code. The URBA code, remember, has the sections on independence, your Part 4A on independence and independent reviews. So if you've got CAs that are performing the independent reviews, then that section would also apply here. The source document has been made available to you. Nothing really major has changed. Right. So they've basically adopted it. And after this, remember that URBA have changed the definitions of listed entity and public interest entity in the URBA code. So SAICA have now done the same. They've also done the revisions. It's no longer a listed entity. It's a publicly traded entity. And the PIE definitions have been changed. The numbers have been changed and whatnot. So please go and have a look at that. I did go through the one in January with you in detail. So please go and have a look at the document. It's released for comments by the 27th of March. And then the proposed amendments will become final revisions. Okay. So it shouldn't be too long after that. I reckon by May, maybe May, June, maybe the session that Karen does with you in June will have the final revision in place. SAICA have then also issued, I love the budget summary that they do, their post-budget commentary and analysis. So it is available to you as a source document. There's the name of the document. Please use it. Don't use it. I quite like it. SAICA also have done a submission on the Trust Property Control Act, the draft regulations there, specifically as they relate to beneficial owner registers and the records of details of accountable institutions. So if you want to go and read up on this to see what they've issued, go and have a look. There's the link for this submission on the draft regulations that they've submitted. And the draft regulations, if you remember correctly, we've given this link to you last month, and it is available this month as well. All right. I did give it to you earlier on as well when we spoke about the Trust Property Control Act draft regulations. Then CIBA, that's the the old CIBA, right? CIBA, Chartered Institute for Business Accountants. They've got their regular CFO talks and Accounting Weekly newsletter. I quite find that very interesting. So follow the links if you want to go, and you can also subscribe to those newsletters there. The Companies Tribunal, you'll see I've given you your source document there. There's been 5 decisions, 1 exemption, 1 review, and 3 requests for the AGM. And in the source document, let me just get there. There's the Companies Tribunal cases. Oh, come on. There we go. You'll see what I've done is I've given you a summary on each one of them. Right. You click on the one to access the summary, and the download button is to download the entire case file. Right. But in a nutshell, all of these were granted. Nothing was refused this month. So the Companies Tribunal was feeling very generous. The Information Regulator, they've called for input on their draft rules on the POPIA complaints procedures. This is for input by 24th of March, so by tomorrow. Just the way that they receive complaints on POPIA and how this is going to happen. So who's alleging the interference with the protection of their personal information. The draft rules are available to you there if you want to go and have a look. And the Government Gazette notice is also available to you. So it is at the moment just the draft rules for the procedures. When they are finalized, we will deal with them and in the MCLU in detail. FIC advisory and guidance. This is just a reminder to all of you accountants out there, which is probably about all of us, who are now regarded as accountable institutions. I'm sure Karen shocked you last month with the FEB MCLU and the session that was held last week, that accountants are now regarded as accountable institutions, and you've got to go and register with FIC. It became effective on the 19th of December, and it says then that as an accountable institution, you've got to register with FIC within 90 days. That 19 days was up on Sunday. That's just passed, the 19th of March. But never fear, I phoned them on last week, when was it? Wednesday or Thursday, I think. I phoned them to confirm telephonically that no penalties will be issued at this stage. They are merely going to have another reminder to say, listen, accountants, we know that you are still suffering, you're still a little shell-shocked. But as a matter of urgency, please register. They will probably give us a new deadline and then say after that, non-registration will be regarded as non-compliant. Right. So please make sure that you do that. The process is very, very easy. On the website, there's lots of tools and stuff that help you how you need to register. I think all you need to register is just the ID of the compliance officer and an authorization letter. The authorization letter is by the board or whoever to appoint the compliance officer to say, we hereby authorize the compliance officer to report to FIC on our behalf. Right. The FSCA publications and press releases. Once again, there was the exchange license for ZARX that was cancelled. They have confirmed that they have going to take a much tougher stance to combat money laundering and terrorist financing. To that end, you'll see that Karen is also going to be doing a long webinar on that, just on the whole money laundering and terrorist financing issue. So that is very, very important. There's also an email that is doing the round that purports to be from the FSCA. It's fraudulent. Please don't click on any links. It's just to fish. Okay. Then why is this one in twice? I wonder. Sorry about that one. Then there's an update on the statutory management of NEFG administrators, just with the who's managing it now. And then there were 7 warnings that were issued against fraudulent FSPs. So you're more than welcome there to refer to your 12 source documents. The Competition Commission issued sensitive information exchange guidelines. And this is just the exchange of competitively sensitive information. All right, they released it last year, September, for comments. And this is now the final ones. But it's just to look at the difference between what information is allowed to be exchanged and what is not allowed to be exchanged. All right. They talk about restrictive horizontal practices. So you can go and have a look at that. The latest Government Connect newsletter is available, and this is for businesses and employers, so please go and have a look at this. It's on the website, and there is the link. There was no VAT Connect newsletter, anything that was issued, no practitioners newsletter, nothing for this month. Just the Government Connect issue. Then our last item for today is a Biz Community article that I found on PayShop, right? Not shop, you've got to say shop. So PayShop is basically the first national cloud-based instant payment service. It's going to be rolled out across all 4 of the major banks, the 4 major ones. The FAT4 was FNB, Standard Bank, ABSA, and Nedbank. And all of this is going to allow individuals to make instant payments to service providers across the board. They can use cell phones. The only prerequisite is that the service provider must have a mobile number. No banking details are required. There's no waiting period, so it's like an instant EFT, but you don't pay extra for it. So if you are a bank account holder, you can now pay and receive up to 3,000 per transaction instantly between the participating banks. So it's originally intended for individuals, but it's also going to have far-reaching benefits for small businesses too. If we're thinking about people like hairdressers, fruit vendors, gardeners, car guards, all of that can happen immediately. All right. PayShop is not a standalone app. It's accessed through your banking channels like mobile banking or internet banking. It's going to be released in 2 stages. So it's going to be you can read what the stages are. But there is a list of banks that are waiting to join PayShop in the near future, like Discovery Bank, Standard Chartered Bank, and Capitec. All right. So I thought that we just need to know about this because it affects us. All right. If you've got a son or a teenage son, please, mommy, I need money quickly. I've always had to do either an instant EFT or whatever. Now you can just do a PayShop payment directly to the cell phone. Okay. And the cell phone number will be the shop ID. That's the unique identifier. All right, and that, ladies and gentlemen, is a wrap for today. Remember, if you need any more details, knowledge is power. We've got the technical alerts that are published daily. I do those every single day, sometimes more than one per day. So please go and follow SA Accounting Academy on LinkedIn. Don't follow me. My profile is basically just there so I can access and follow other people. Then we've got SAA's YouTube channel where you've got lots of free videos that you can go and have a look at. I'm also now recording at least 8 TSVs a month, a technical summary video. These are short summaries if you want to access them in a little bit more detail than we've gone through in the MCLU, but not quite a 2-hour webinar. All right. They're like 15 minutes each. Then we have the webinars on demand. So not always a live event, but the recordings are available as well. And that's on the SAAA website that you need to refer to. And then, of course, the MCLU subscription. I did see a couple of new names, so welcome to everybody today. But if you're not yet on the subscription side, please go and join. If you have any questions, we are going to have, I don't think we need to take a quick comfort break. We can go straight into the question session now. But I'm going to just quickly end the recording and then we'll go back to the Q&A session afterwards. All right. Just to field some of the questions that we dealt with. If you need to email any technical questions, please email us on technicalquestions@accountingacademy.co.za. Please make sure that you try and relate to the topics that we've dealt with. Stick to those. And if you have any general comments, I need to tell Lettie that this and this and this or whatever, please send that to info@accountingacademy.co.za and they will forward that information on to me. Right. So that, ladies and gentlemen, as they say in Afrikaans, fluit my storie is uit. Thank you very much for your participation. I hope that you are sufficiently flooded with information and I look forward to training you again in future. Enjoy the rest of your day, ladies and gentlemen. Stay blessed. Thank you and goodbye.